All right, let's talk about building an investment portfolio that can actually weather a storm. We're going to dive into a tale of three really different but high-quality companies and see how each one can play a unique role on your investment team.
Let's just kick things off with a quote that really hits home. Most investors lose money because they never take the time to truly understand what they're buying. Wow. That's a huge mistake, right? And it's one we're going to try to avoid today by really digging into the why behind these investments.
So that really leads us to the big question, doesn't it? How do smart investors actually think? We're going to try and answer that by breaking down a really disciplined strategy for putting together a portfolio that's genuinely balanced.
Okay, so first things first, what's the problem we're trying to solve? Well, a lot of portfolios these days are just super heavy on tech. And look, tech can be amazing for growth, no doubt. But putting all your eggs in one basket, that's risky. Smart investors, they build for durability. They're looking for companies that can do more than just grow. They need to be able to survive, the tough times, the recessions, all that uncertainty.
So the goal here is actually pretty straightforward. It's really just three simple steps. 1, find great companies, high-quality businesses. 2, buy them when the price makes sense, when they're reasonable or maybe even a little cheap. And 3, and this is key, do your homework. Focus on real research, not just the latest hype. All right, let's see how this plays out in the real world.
Okay, first up, let's look at our first case study. We're going to call this one the innovator. And the whole idea here, the archetype, is finding a fantastic company that's built for growth, but is on sale right now. And the company that fits this mold perfectly? It's a software giant I'm sure you've heard of, Salesforce. Ticker is CRM. So why are we talking about them? Well, check this out. The stock has been hammered, down more than 30% in the last year. And that's mostly because the whole market is kind of worried about tech spending. But here's the thing. When a really great company's stock drops that much, that's when savvy investors start to get very interested. Because if you ignore the stock price for a second and just look at the actual business, the fundamentals are rock solid. They're still growing strong, their margins are healthy, their finances are in great shape. By any measure, this is a quality operation. And this brings us to a really important idea called intrinsic value. This isn't about what the stock is doing today or tomorrow. It's about what the company is truly worth, deep down. And right now, all the signs are pointing to the fact that Salesforce's stock price is way below its actual underlying value. And that's the whole opportunity right there. The business is fine, it's not broken, but the price is. The market is pessimistic. And for someone investing for the long haul, that gap between a great business and a beaten down price, that's the sweet spot. All right, let's pivot completely for our second case. Let's meet the fortress. And as the name suggests, this one is all about rock-solid financial strength and, safety. So we're leaving cloud software behind and jumping into the world of cutting-edge medtech. The company is Intuitive Surgical, the absolute leader in robotic surgery. And what's its superpower? It's right here, 0. That's how much corporate debt they have. Zip. Nada. In today's world where almost every company is loaded with debt, being debt-free is a massive, massive advantage. It means when things get tough, they don't have to panic. And it's not just about the lack of debt, it's about what they do have. Just look at these profit margins. About 25 cents of every single dollar in sales goes straight to the bottom line as pure profit. That is just incredible, and it puts them leagues ahead of most of their peers. So let's add it all up, right? You've got 0 debt, which gives them stability in a recession. You've got those huge margins, which screams efficiency. They have what investors call a strong moat, meaning it's really hard for competitors to challenge them. And while it's never a cheap stock, it is trading at the low end of its historical price range. That is a financial fortress. Okay, on to our third and final case study. This time, we're looking to add some diversification and a steady stream of income. So let's meet the income engine. The name says it all. This one is about consistent, reliable cash flow. And our company here is VICI Properties. It's a powerhouse in real estate, and you'll see pretty quickly that it plays a totally different game than Salesforce or Intuitive Surgical. And that's because VICI is a special kind of company called a REIT. That stands for Real Estate Investment Trust. The easiest way to think about them is as income-generating machines. They own a bunch of real estate that makes money, and they're pretty much required to pass a big chunk of that income straight to their investors. And here's the main event, the big draw for investors.
a dividend yield of about 6%. I mean, if you're trying to generate passive income from your portfolio, a number like that is going to get your attention, especially when it's coming from a really solid business.
So you can really see the job VICI is supposed to do in a portfolio. It's that income machine. It can provide a bit of stability when the rest of the market is going crazy. It has a track record of raising that dividend year after year. And to top it all off, it also looks pretty cheap based on the amount of cash it generates.
Okay, so we've looked at three really different businesses, right? Each one playing a completely different role. So now let's pull back and look at the big picture, see how it all comes together. Because this isn't about just picking random stocks, it's about building a team.
And honestly, this is the most important takeaway of this whole thing. Great investing is not about finding the one perfect stock that's going to make you rich overnight. It's about building a team of fantastic businesses that work together, creating a portfolio that's strong and balanced.
This chart really lays it all out perfectly. You've got Salesforce, your innovator, ready to perform when growth is what the market wants. Then you have Intuitive Surgical, your fortress, providing that stability when things get shaky. And finally, VICI Properties, your income engine, just churning out that cash flow, good times and bad. See? Different jobs, different strengths, but they all work together on the same team. And that really brings us to the final thought, which is a question I want you to ask yourself. When you look at your own portfolio, which of these jobs is unfilled? Are you missing an innovator? Do you need a fortress? Or is it an income engine you're lacking? Just figuring out which role your team needs most, well, that's a huge first step towards building a truly resilient financial future.